Let's talk about the money that runs the world, the US dollar. For decades, it's been the global superstar, the currency everyone trusts. But now, China wants to change the game. Instead of just joining the party, China is building its own, inviting countries like Russia, Brazil, and Saudi Arabia to trade in yuan, not dollars. This isn't just a suggestion, it's a strategy. China, as the world's factory, is using its economic muscle to get trading partners to use the yuan. Imagine the dollar as the world's default language. China is teaching everyone a new one, transaction by transaction. Countries that need what China sells or want access to its market are starting to play along. Take Argentina, running out of dollars, it's now paying for Chinese imports in yuan, a lifeline with strings attached. Each deal may seem small, but together, they're building a new financial order. For China, this means more influence and protection from US sanctions. The US can use the dollar's dominance to impose sanctions, but if the world shifts to the yuan, that power fades. China isn't just asking for a seat at the table, it's building a new one and inviting everyone. The question: will the US have to play by China's rules? This is a fundamental shift, not just about pride, but about real power. The more countries use the yuan, the more stable and influential it becomes. It's a quiet, methodical campaign, and the pattern is clear. China wants to rewrite the rules. The world's financial game is changing, and the old king is looking vulnerable. The US dollar's reign isn't over, but the challenge is real. The menu is changing. Will the US be forced to eat what China serves? The world is watching. The US isn't just watching China's moves, it's fighting back. The dollar's global status is a pillar of American power, letting the US borrow cheaply and influence the world. When China made yuan deals with Argentina, the US responded fast. The IMF, heavily influenced by the US, approved a massive bailout for Argentina, billions of dollars. This wasn't charity, it was a strategic move to keep Argentina in the dollar's orbit. It's a geopolitical tug-of-war, with currencies as the rope. The US uses its financial institutions and deep markets to remind the world the dollar is still the most trusted currency. The message? The yuan may be new, but the dollar is the reliable friend who bails you out. Every US move, like the Argentina bailout, is a defensive play in this currency chess game. The stakes: America's ability to fund itself and project power. But fortresses can become isolated if the world builds a new city elsewhere. That's exactly what China's trying to do. The battle is on. This isn't just about countries, it's about big business too. Take BHP, a mining giant. For years, iron ore was traded in dollars. That's just how it worked. But China, the world's biggest buyer, wanted a new rule: pay in yuan. Chinese buyers, nudged by the government, started insisting on yuan payments. BHP had a choice: adapt or lose access to China's market. This move sent shockwaves through the commodities world. If you want to sell to China, you play by China's rules. Rule number 1: use the yuan. This isn't theory, it's happening now, in billion-dollar deals. If major commodities like iron ore and oil shift to the yuan, the dollar's foundation cracks. China is no longer suggesting an alternative, it's demanding it. The message to global companies: change with the world, or get left behind. The yuan is moving from the sidelines to the center of global trade. The rules of the game are being rewritten. You might wonder, what does this mean for you? Enter the markets. Stock, bond, and currency markets are the world's nervous system, and right now, they're twitchy. Traders are watching this currency showdown with a mix of fascination and fear. When China pushed BHP to use yuan, iron ore prices and the Australian dollar wobbled. Markets hate uncertainty, and China is changing the rules. Volatility is up, and investors are nervous. Every new trade deal or policy sends ripples through the system. Investors are asking, what happens if fewer countries need dollars? What if companies get caught in a currency war? The old playbook is out, nobody knows the new one. The market's jitters show how big this shift is. The dollar-dominated world is being challenged, and Wall Street knows it. When the people who control the money get nervous, everyone should pay attention. The financial ground is shifting. China's main weapon isn't military, it's its massive shopping cart. As the world's biggest importer, China is now saying, we'll buy your goods, but pay us in yuan. Sellers like Brazil, desperate for China's business, have little choice but to agree. Each time this happens, another trade shifts away from the dollar. China is methodically using its buyer power to spread the yuan. It's not just commodities, foreign companies want access to China's huge market, so they adapt to the yuan too. China can set rules that favor its currency, making it easier for those who play along. The allure of 1.4 billion consumers is a powerful motivator. This strategy is a cornerstone of China's plan to de-dollarize. No drama, just relentless economic pressure. China is quietly reshaping the world's financial plumbing, one deal at a time. The shopping cart, it turns out, is mightier than the sword. The revolution is in the fine print. Now, let's look at Japan, a warning sign for the global system. The yen has plunged to its weakest in decades, a symptom of dollar dominance. US interest rate hikes have investors dumping yen for dollars, making imports expensive and hurting Japan's economy. The Bank of Japan is trapped to raise rates and risk recession, or let the yen fall further. This chaos shows the strain of a dollar-centric world. China can point to Japan and say, "See what happens when you rely on the dollar?" The yen's crisis is a marketing campaign for the yuan. Even major economies can be destabilized by a single dominant currency. The case for a multi-currency world grows stronger every day. Step back and connect the dots. China's yuan deals US pushback corporate pressure market jitters, Japan's struggles. These aren't isolated events, they're part of a global power shift. For 80 years, Washington, D.C. was the world's financial capital. Now Beijing is building its own. The cracks in the old system are showing. Argentina's deal, BHP's blockade, the yen's fall. Each is a step toward a multipolar world. The US is still powerful, but now, there's a real alternative. This changes the calculations for countries and corporations everywhere. It's driven by China's rise, global frustration with US dominance, and the instability of a single currency system. This isn't a conspiracy, it's self-interest in a changing world. The transformation is messy and long-term, but it's happening. The dollar won't disappear, but its era of total dominance is ending. The world's financial conversation is becoming a dialogue, not a monologue. The new money map is still being drawn, and it will look very different. So, what does this mean for you? The outcome of this struggle will affect everyone. Your savings, your mortgage, your job. As the US and China compete, expect more market volatility and uncertainty. A stronger dollar might make imports cheaper, but hurt US exports and jobs. A weaker dollar does the opposite. In the long run, two major reserve currencies could mean more competition, or more complexity and conflict. Imagine switching currencies every time you do business across blocks. We're living through a pivotal moment in economic history. The rise of the yuan is about more than money. It's about global power. The world's financial landscape is being reshaped, and we're all along for the ride.